Hey there, investors! Let's talk about the stock market. We've seen some big changes recently. The NASDAQ and the S&P 500 have been cooling down. That means their prices have been going down a bit. Don't panic. This happens sometimes. This doesn't mean the market is crashing. It's just taking a breather. Think of it like a runner taking a break during a race. They need to catch their breath to keep going. The market is the same way. You might be wondering why the NASDAQ and S&P 500 are taking a break. It's a question on many investors' minds. Well, there are a few reasons. One reason is inflation. Inflation is when the prices of goods and services increase over time. Inflation means prices are going up on things we buy every day, like groceries, gas, and even housing. When prices go up, people sometimes buy less because their money doesn't go as far as it used to. This can lead to a decrease in consumer spending. This can hurt companies and their stocks because lower consumer spending means lower revenues and profits for businesses. Another reason is interest rates. Interest rates are the cost of borrowing money. The Federal Reserve, which is like the Bank of the United States, has been raising interest rates to combat inflation. Higher interest rates make it more expensive to borrow money for things like buying a house, a car, or even for businesses to invest in growth. This can slow down the economy because people and businesses may cut back on spending and investment, which can impact stock prices negatively. Remember, the market goes up and down. It's totally normal. Stock markets are influenced by a variety of factors, and it's important to stay informed and patient during these fluctuations. Now let's talk about the Dow Jones Industrial Average. This is another important stock market index. Guess what? The Dow Jones has been doing great. It even broke a record recently. That means it reached its highest point ever. This is exciting news. It shows that some parts of the market are still very strong. But why is the Dow Jones doing so well when the NASDAQ and S&P are cooling off? We'll explain that next. The Dow Jones is like the grandpa of stock market indices. It's been around for over 125 years. It all started back in 1896 with Charles Dow. He wanted to track the performance of the biggest American companies. Back then, the Dow Jones only had 12 companies. Can you believe that? Now it has 30. These are some of the most well-known companies in the world. Think about companies like Apple, Coca-Cola, and Disney. They're all part of the Dow Jones. The Dow Jones is a big deal because it represents the overall health of the American economy. Section 5, Spotlight on the S&P 500. Now let's talk about the S&P 500. This index is like the big brother of the Dow Jones. It's a bit younger, but it's much bigger. The S&P 500 tracks 500 of the largest companies in the United States. That's a lot of companies. Because the S&P 500 is so big, it's considered a good representation of the overall stock market. When people talk about how the market is doing, they're often talking about the S&P 500. So, the S&P 500 is like a snapshot of the entire stock market. Section 6, Decoding the NASDAQ. Last but not least, let's talk about the NASDAQ. This index is like the tech-savvy little brother. It's known for having a lot of technology companies. Think Apple, Microsoft, Amazon, and Google. They're all on the NASDAQ. The NASDAQ is known for being more volatile than the Dow Jones or S&P 500. That means its price can go up and down more dramatically. This can be exciting for investors who like a little bit of risk. So, the NASDAQ is the place to be for tech lovers and thrill seekers. Section 7, Giants of the Stock Market. We've talked about the Dow Jones, S&P 500, and NASDAQ. These indices are the heartbeat of the stock market, representing the performance of the largest and most influential companies in the world. They serve as a barometer for the overall health of the economy and are closely watched by investors, analysts, and policymakers alike. Now let's meet some of the big players on each index. These companies are not just names on a list, they are the driving forces behind innovation, employment, and economic growth. Their decisions and performance can ripple through the entire market, affecting millions of people. The Dow Jones is home to giants like Apple, Microsoft, and Johnson & Johnson. These companies have a long history of success and have become household names. Apple, with its groundbreaking technology and sleek designs, has revolutionized the way we communicate and interact with the world. Microsoft, a pioneer in software and computing, continues to shape the digital landscape. Johnson & Johnson, a leader in healthcare, has been at the forefront of medical advancements and consumer health products. These companies are like the captains of industry. Their CEOs are often seen as visionaries, steering their companies through the ever-changing tides of the global market. They make strategic decisions that can lead to new innovations, job creation, and economic growth. They're leaders in their fields and have a big impact on the economy. The products and services they provide touch nearly every aspect of our lives, from the devices we use daily to the healthcare we receive. Their influence extends beyond their industries, shaping trends and setting standards for others to follow. The S&P 500 includes a wider range of companies, from tech giants like Amazon and Alphabet, Google's parent company, to healthcare companies like United Health Group and consumer goods companies like Procter & Gamble. This diversity makes the S&P 500 a more comprehensive reflection of the economy. Amazon, with its vast e-commerce platform, has changed the way we shop and consume. Alphabet, through Google, has become an integral part of our daily lives, providing information and connectivity. United Health Group is a major player in the healthcare sector, offering a range of services that improve the quality of life for millions. Procter & Gamble, with its wide array of consumer products, is a staple in households around the world. And of course, the NASDAQ is a haven for tech titans like Apple, Microsoft, Amazon, and Meta, Facebook's parent company. This index is synonymous with innovation and growth, housing companies that are at the cutting edge of technology. Meta, with its social media platforms, has transformed the way we connect and share information. These companies are constantly pushing the boundaries of what's possible, driving advancements in artificial intelligence, cloud computing, and digital communication. These companies are shaping the future of technology as we know it. Their innovations are not just changing the tech industry, they are influencing every sector, from healthcare to finance to entertainment. As they continue to grow and evolve, they will undoubtedly play a crucial role in defining the future of our global economy. Section 8. So, where should you invest? Now for the big question, which index is the best to invest in? Well, there's no one-size-fits-all answer. It depends on your individual goals and risk tolerance. If you're looking for a long-term investment and want to play it safe, the Dow Jones or S&P 500 might be good choices. They're like the reliable old cars of the stock market. They might not be the flashiest, but they'll get you where you need to go. If you're feeling a bit more adventurous and don't mind a bumpier ride, the NASDAQ could be a good option. It's like the sports car of the stock market. It can be exciting, but it comes with more risk. Remember, it's always best to talk to a financial advisor before making any investment decisions. A financial advisor can help you understand your risk tolerance and investment goals. They can also help you diversify your portfolio to minimize risk. Diversification is key to a successful investment strategy. It means spreading your investments across different asset classes to reduce risk. For example, you might invest in stocks, bonds, and real estate. This way, if one investment performs poorly, the others can help offset the loss. It's also important to regularly review your investment portfolio. This will help you stay on track to meet your financial goals. And remember, investing is a long-term game. It's important to be patient and not panic during market downturns. Market fluctuations are normal and should be expected. The key is to stay focused on your long-term goals and not get distracted by short-term market movements. So, where should you invest? The answer depends on your individual circumstances. But with careful planning and the help of a financial advisor, you can make informed investment decisions that align with your goals and risk tolerance. Happy investing. Section 9. Remember, it's a marathon, not a sprint. Investing in the stock market is a long-term game. It's not about getting rich quick. It's about building wealth slowly and steadily over time. Don't panic if the market takes a dip. It's normal for the market to go up and down. In fact, it's healthy. Just remember to stay focused on your long-term goals. Think of it like running a marathon. You'll hit some hills along the way, but as long as you keep running, you'll eventually cross the finish line. Section 10. Keep your eyes on the prize. The stock market can be confusing, but it doesn't have to be. By understanding the basics, you can make informed decisions about your investments. Remember, knowledge is power. So keep learning, keep asking questions, and keep your eyes on the prize. A secure financial future. And always remember, I'm here to help you navigate the exciting world of investing.